Good morning. Happy Monday,
Good morning.
everybody. Good morning.
Good morning, everybody.
Good
Good
morning.
morning.
Good morning.
How's everyone
Everybody
doing?
had a good weekend?
I did,
I
for the
actually,
most part.
The Bears won. I did. I had a great weekend.
Wow, good for you. Bears are on a winning streak, aren't they?
Yeah, they are.
Wow, that's amazing. Yeah, I used to when I lived in Schaumburg for a couple of years. I used to root for the Bears unless they played the Packers. But anyway, that's all conjecture. All right. Well, let's get going. Um, a little bit cooler this morning, but in the 40s, but it's going to be in the 70s all week here, 60s and 70s. So that's good for us. Hopefully you guys get that too. I think I'm starting to lose track, but I think we're in the 32nd day of the shutdown. Okay, so
35th.
is it that?
Yep, 35th. The longest one was 2018, 2019, I believe.
Okay,
That
yeah,
area. Yeah, so
okay.
we're on the verge of setting a new record.
Woohoo! Records. That's what we want.
Absolutely.
Convenience store.
Yeah. The markets closed last week on Friday. The Dow was up over 40 points, Nasdaq over 143, S&P up 17. Today's earnings, really everyone will be watching after the Bell Palantir comes out. We're seeing some bid caught this morning in pre-market on Palantir, VRTX, SPG. Tomorrow we've got AMD, SMCI, Pfizer, Shopify, and Uber. Wednesday we have Lucid, McDonald's, Qualcomm, ARM, and Snap. Thursday, Moderna, Airbnb, Square, Take Two, and then Friday just basically Duke Energy. So lots of earnings this week, not as big as last week, but anyway, uh, that's where we are. So I was telling Trent before, I was looking at all the stocks I screened over the weekend. It was amazing how many have moved from the upper left of the screen down to the lower right and have moved down closer to intermediate support levels and away from the top. In fact, it's a lot. And then on the other side, I looked at, well, markets have been up. Last week, the markets were all over and we went up and down based on Microsoft and Meta and all the earnings that we got, the five mags. And you can really tell that through market breadth, last week, market breadth, we talked about it, advanced decliners. So for most of the week, you saw the number of declining stocks higher by percentage than the number of advancing stocks, even if the market closed up. And that was because we look at the Mag Sevens and all the companies that support it going up, but everybody else is going down. But because the market cap is so high on those Mag Sevens, it just influences the market. So it makes it look like the market's going up when in fact, you see the market on majority of stocks going down. And Trent shows you every time the under 200, the under 50, the under 20. And we saw last week it's heading down, okay, as far as that. And so that's the market breadth. So this week, I decided I was going to focus on, since majority of the stocks going up are like in the AI, I was going to focus on the tell stock sheets from Kerry for potential swing trades, entries and exits, under the 200 in swing trades. Now, Kerry's just as Kerry's trades are investments. Okay, so he has, and you can go to his tell sheet, and there's more information on there than I've ever seen in a college curriculum. And you can go in there and you can see where he entered. You can see where his prediction prices are in the future. You can go and do deep dives on his stuff. But I thought, since that's where the momentum is, we'll go over and we'll take a look. And so that's where that's where I focused this week. The only other thing we had, let's make sure of my notes. Oh, Berkshire Hathaway always reports earnings on Saturdays when the market's closed. So they came out and their operating profits are up 34% year over year. 200% surge in insurance underwriting income plus railroads. They didn't buy any shares back, even though their shares were down. and they increased their cash reserves from 347 billion to 382 billion. And they were a net seller of stocks. They sold more stocks than they bought. So if you think about it, Warren Buffett has been through this, has been to this rodeo before, and he has been building cash reserves, not buying even his own stock back, okay, even when it's down. And so take for that what you will, but I've been in the stock Berkshire a long time, and I believe he's just building up, and he sees something on the horizon that he thinks he's going to get some bargains, and that's the way he is. Trent and I talked a little bit about it over the weekend. That's the way he is, and it might take a while. He's been building a stockpile up, but he's usually at some point. He did it in the great financial crisis. He did it back in the .com. So, we're just starting to put some pieces together and connect the dots on things. And you see Ray Dalio and J.P. Morgan's Jamie Dimon and Larry Fink and a lot of people out there saying, just be careful and cautious. And when those guys say things, we should probably listen and at least put it into our psyche. We can still trade. Doesn't mean you just roll out. You can still invest, but you need to be thinking about a plan. So anyway, today we're looking like the Dow's down a little bit. We're just flat. Nasdaq's up. It's going to continue to pile into probably the AI trades. We got Palantir today. Nvidia is going to be up. I think they approved sales to UAE over in the Middle East. That'll bump that up, and any other stocks. And just remember, all these companies are spending a lot of money, and at some point they're going to need to be paid back to shareholders and the bondholders. So we'll just be aware of that too. All right. Forgot to send my request to you, Trent. Get into the.
It's all right. You're in, buddy.
All right, thank you. So thought I had this up, but I didn't. So you see the Dow futures were flat. Okay. Beyond Meat fell 8%. Okay. Anything else going on here? Auto stocks rally. Berkshire, Kimberly-Clark's going to buy Kenvue. That's the Tylenol maker. So just a couple things out there to look at. All right. So moving on, I'm going to go to this because we have new members all the time, and some members every Sunday. I come in the charts of interest. This is our Discord. Okay. See Kerry's office, Kerry's trades. Here's my office. You can always contact me here if you have a question. I'll get to it as soon as I can. We have crypto, market news. I go into charts of interest. Okay. And every Sunday I'll come in. Well, this week I'm featuring stocks that are listed on Kerry's tell sheet. I always do stocks under the 200, which have certain risk, and I list the risk here. And then I do the watch list for potential swing trades. Today, since I went to Kerry's tell sheets, I think he has like 42 stocks on there, and I found two that would be on the under 200 list and maybe have a trade. And I put the charts in here so you can go look at it. You can comment back. Some people give thumbs ups, and then here's our potential swing trades out of the tell sheet. Okay, and again, remember Kerry Invest. And I just went in to say, if you want to trade, because we've had some members say, let's look at some of these for maybe trades. And I found a lot more potential swing trades in here, and we'll go over those too. And again, there are some risks. I put my swing trading guidelines in here so you can see that I go by guidelines. I just don't go by, shooting from the hip. And then I put the charts in here, and thank you for everyone who gives us thumbs up over here. So that's where you can find it, and you can ask me questions and things in my office here. And Trent has an office, and Kerry has an office, so always use that on the Discord. And we'll go over and we'll take a look at some charts, and we'll get into the tells. Oops, sure. And we'll start with the Dow Jones. The DIA is the ETF for the Dow Jones, and you see we've had a nice run up on this, and even the Dow. I mean, the Dow has followed up. It was a little bit slower than the Qs and the S&P, but we've come up and we've hit some resistance up here the last 3-4 days, and we're going to open up about where we closed. One thing that kind of caught my eye is this stochastic has crossed over negative. This is the reason I use this. This usually is pretty correlated to showing what's going to happen in the future on the MACD, and the MACD is where we get confirmation for crossovers, and where you might want to enter into a swing trade. And when that crosses back over, that's giving you a sign you might want to get out. So we do have some resistance up here. We're going to open just a little bit lower on that side. Look at the S&P and the 6-month chart here on the daily. It's a nice run up, which we all know it keeps hitting its head on all new time highs. And again, we right up against resistance right here, the green line. We're going to open up a little below, right up the resistance level. And we have some sell orders above, at the 692 and change. Again, I look down here and I see this crossover on the stochastic. It gives me a little concern. You're seeing the MACD kind of roll that way too. And then we'll go to the Qs, and the Qs, the Mag 7 or 50% of whatever happens on here is from the Mag 7. So that's why you get a little more pop on it, because it's just flying. But again, I see this crossover here and we'll see what happens. You see the histograms here, and this tells me how close the MACD line gets to the signal line. So if it's growing this way, it's moving away, which is obvious. You can see it. But sometimes it gets a little bit, sideways, but you can see what happens when it's even closer. And you see that's where the stochastic has moved down a little bit. All right, let's look at gold. A lot of times people go to gold for safety, and we did. I mean, we had this nice run. We were really flat for a long time until about the end of August. Then we rolled this up, came up. Now we had, this is your resistance level now, but back, this moves with the market. As the market moves, resistance and support down here move. So this moved down, and this is our new resistance as we've come down underneath the 9. We're going to open right under the 9 again. You can see the stochastic went negative right about in this area. The MACD was still positive, but it gives you an indication where it's going to go, and that's exactly what happened. You look up here, and that's where we crossed back below the 9, and we're still below the 9 today. Trying to make a move up. The 9's coming back down. We'll see if that acts as resistance or it continues, can get past that, but then you have resistance right above that on gold. So gold's just kind of waiting around to see what's going to happen. SLV, silver, same thing. Silver's got actually a little bit above the 9, but barely. And we're going to open up about where we closed. Again, the MACD this is the opposite. The MACD is still negative. Okay, here's your MACD line. And here we come down, we've hit the bottom, and the stochastic has crossed over. So that kind of gives you an indication that potentially we might see a crossover and get a little more momentum, but not right yet. Look at the RSI is at 52, which is above our 50, but still nothing here, other than, I would look at that and say, well, we're above the 9, but the MACD hasn't given me that confidence to say, yeah, I want to get back into silver. Some people may trade on the stochastic and say, yeah, I'd like to get back in. I'll take a little bit more risk on that. I don't do that. Bitcoin popped down a little bit. Let's get a little closer here. It's back down in the 105 to 110 level. Okay, we've done this before. We've come back up. We're under the 9. We're back under the 200 now. This is kind of a major thing if we can't get back up. Support is right here at 105, which is where our Bollinger is. So we could come down, bounce, and move up, or if we go through that even further below the 200, it's not a good sign, because 200 is, we've talked about it. And Trent says, nothing good happens under the 200, but we've been playing around it. We've wicked down below the 200, a lot. We'll see if it catches some momentum today and moves back up. Negative on the MACD, but not by much. We'll see if we get a turn on the stochastic and your momentum's below the 50. And that's going to reflect on MicroStrategy, of course, because it's levered 1.5 to 2 times. So MicroStrategy has come down. It's, got a little bit of the Bollinger turnaround. We've got almost a cross here on the stochastic, not on the MACD yet. And then it, kind of started moving back up to the 9, but we're going to open below it with that Bitcoin price down. We're still under the 9. So a swing trade, I just wouldn't do it at this point, with MicroStrategy. Ethereum, same thing. We're just below the 9, but Ethereum's kind of going sideways, to down, really close Bollinger Bands. The oscillators look the same on Ethereum. That follows it quite a bit, not 100%, but for the most part. And then we look at NVIDIA, get into, these are on Kerry's tell sheet. NVIDIA is right up here playing right along resistance, and between resistance and where the sell orders are, you see the Bollinger starting to roll a little bit, have a crossover here. on the stochastic, but we're still pretty wide on the MACD. So we'll see. This is going to pop up today, like we said up here. It's still below where sell orders are, and we can see where it wicks up and comes back down. We'll see what happens today. But again, I don't like buying anything outside the Bollinger Band. I certainly don't like buying it with resistance sitting right there. Google's right up on resistance. It tried to pop it before, get up, and then come back down. Friday it came up, hit where the sellers are, came back down. And that's exactly we're going to open again right on the Bollinger. So might catch a bid, but it's got to get past this green line of resistance. And again, look down here, we had this negative crossover on the stochastic, and we're seeing a little bit of a roll on the MACD. Amazon, with earnings, that earnings popped up, and remember we said, because last Friday we're like, this line here was up here. Okay, we said, do you want to go chase that? And if anyone went and bought in thinking it was going to go higher where it opens, which opened right here, it closed at the low of the whole candle. Okay, not much of a wick. So if you bought in here, you're underwater right now. So I like to not chase those things. And again, today we could, we're going to open up just a little bit above where we close. We're outside of the Bollinger. Doesn't mean we still can't go up. I like to see this move back inside the Bollinger. You only trade 5% of the time outside of either the upper or the lower Bollinger, but the oscillators look pretty good. But still, if you look at stochastic, we have not crossed back over yet, even with this big gap in this candle here. So again, probably possibly might continue its run up, but there's a big gap here. Gaps don't always get filled, but for the majority of the time they will at some point. Doesn't mean it's going to happen today. But Amazon was a big part of why the NASDAQ and the S&P were up last week. Tesla just, we've been kind of sideways, since about the 24th of September. We got resistance here. Bollinger Bands are opening up just a little bit. Oscillators. Here's that crossover. You see these patterns, these crossovers negative on the stochastic, and we're still negative on the MACD. So, these are your gauges down here. How much fuel do you have? What's your airspeed? What's your altimeter? That just one of them together, is important, but all three together are really important. It's still nothing here to tell me to, that we're going to take off or even go down. We're above the 9. We've got a really tight Bollinger Band here. We're above the 20. We've been bunching off the 20 as support, but we're getting real close to the resistance level. And you also see the 9 kind of roll. Sometimes we see that it rolls back down. We'll be watching that on Tesla, but no real momentum to tell me to jump into Tesla right now. Microsoft had earnings, lots of excitement, and people started looking at what they're spending. Came back down right to our resistance level. And here's where we're going to open just a little bit above it. Look at the MACD here crossing. Look at here, we've got the stochastic crossing. So it's not going to be popping up like we saw on Amazon, but it's going to open right about the same. So again, nothing there. It's exciting me about hopping into that. Meta came down 2 days underneath the 200. So this is, if you're an investor and you use the 200 like Paul Tudor Jones, this is starting to get concerning. And we track this on our watch list sheet. You can go in and see that. And we use this as a long-term investment line that I would probably be thinking about getting out here. We're going to open right here, which is still below. I gave it a day or two to see if we'd pop. It doesn't mean we can't, and follow up on the momentum. But I think Trent told me that Meta took out a bunch of bonds, and he can talk about that a little bit later. But some of that's part of what happened, plus all the money they're spending. What 90 billion or whatever they're going to spend on AI, and so that's a huge gap. So if I were an investor, you might think about getting out and waiting for that to come back over that 200. And the reason I say that, if you're just new, if you use the 200 wanting to get in and out, like Paul Tudor Jones, you got in right here. You got in at $570.50, and you don't get out until now, and you're out at $648.35. So that's pretty good profit for one trade, and you just wait for it to happen again. Like right here, it came down, got out, wait, didn't quite get in because you didn't get a full candle. So you're down, 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 and then you get in here. So you missed this whole time. You can put that in a treasury bill, money market, other stock, and then get back in. And now we're back down below. So you can see exactly what happened here on the oscillators too. Same thing that happened back in this area. So if you're an investor, you might want to think about that. We're not going to tell you what to do on this channel, but we will just tell you what we see on these charts. Apple. Apple got a lot of bid, after their earnings because they talk about it's going to be a great Christmas season. And we have some members, and I kind of agree with them, with the economy the way it is and people kind of where they are and with shutdowns and stuff, are people going to go out and give, Apple phones? And Trent brought up the fact that they don't cost that much if you get in a plan. And I don't have Apple phones, so I don't know anything about it. So I'll stay out of it. But, the exuberance went up to right where the sell limits were, and then right back down to resistance. So that was kind of a one-day happiness trail, and then it came back down. So again, just be careful on chasing some of these things because you can get kind of a bit of a rug pull. Doesn't mean it can't come back, but you want to kind of buy more towards the bottom within these bands than buying at the top. I don't like buying anywhere along the upper Bollinger Band, and you can get a good momentum stock and do that. But it can stop you really quick. And if you're not paying attention, you can get burned on those. Palantir is going to open up right below their where their sell orders are. So outside the Bollinger Band. So Palantir's had this nice run in anticipation of earnings, and we'll know after the bell. When I swing trade, I like to get out before earnings. So I'll take this profit. I would, if I was in it, which I'm not, I would take this profit today. And doesn't mean that Palantir is not going to kill it, and that stock goes up 15%. But if something trips up, it'll go down 15%, and I don't want to be in that as a trader. As an investor, if you're using the 200, you don't really care because you're this far up, from your 200, and where you got in. So that's the difference between what Kerry does and what we do. Looking at technicals, I do it shorter term, from a day to a couple of weeks, and Trent does it, intermediate. So again, we're trying to give you all the options that you can have. Netflix, here's another one.
Mark, real quick, in regard to Palantir, your rule that you do about a 2 or 3% in your risk management,
Right?
wouldn't it, instead of pulling, when I hear you say you're pulling out, I hear you say you cash. If you had it, you'd be cashing it all out. But would it be just fine just to do, bounce up and do a 2 or 3% risk management, loss prevention?
Well, yeah, you could do it.
God, I'm trying to get my brain wrapped around this real fast. If it does do a gap and go, then you're fine and you stay with it. But if it does a gap and crap and goes down, that 2% will just trigger it, and you can sell it.
Yeah, that's good unless it's a really big gap down and it goes below your 2%, and you miss it. You either put a limit on there, where you'd miss
Well,
it.
I do use limits.
Yeah. But if you have a really big gap and you have, let's say you're stopped right here, but it opens up down here. Okay. Depending on the order you have, you might not get triggered, or you may get triggered and it goes down so fast you get it down here, depending on what kind of an order you put in.
Okay.
A stop or a stop limit. So as a trader, you can always put in a trailing stop, but on these earnings, that's just my rule. Yeah, I mean, you can. My rule is what I do, and you're perfectly based on your risk, Steve. If you like that, and put that in your plan, I have no problem with that. If it works for you, I just do it a little different.
No, that's fine. I was just kind of discussing and bouncing it off of you, just because I'm trying to get ideas on how to manage various things, I guess.
Yeah. And again, I'm trading it, so I don't fall in love with it. And if it comes up and it goes up and gives me another opportunity, I'll get back in. So, but I'll take whatever, if I got in at this point here, okay, 184, and I get out, let's say I put it in and say, I'm going to get out right here where the sell orders are, 205. Okay, that's a good enough profit for me, then I'll wait. I'm out.
Okay,
Yeah.
I got you.
And that's my thought process on trading. And other people, some people get kind of their trading philosophy and their investment philosophy kind of mixed up. And that's why I have separate accounts. One's a trading account, one's an investment account. So that when I look at it, I'm like, this is for trades only. Okay. I'm not doing the investment type thing. And then the other side is the investment. So I put on whatever hat I'm thinking about and try to keep those separate. But
Right.
you're right. You can still use technicals on both. You just use different ones. These are short term. These 9s, 20s are short terms. You got the 50 and the 200 as far as moving average are more longer term. And you can use those. A lot of people might use the 50, like on Palantir here. If you use the 50 a long term, you're in. You came down, touch it, you're in, you're in, you're in, you're in, you're in, you're still in. But if it comes down really fast, you'll get out earlier than you would at the 200. Okay. So it's just what you want to do, what your risk profile is, and what your tolerance is on that.
Right, I
But
usually use
good
20.
question though, Steve. Good question.
Thank you.
Yeah, thank you. And you guys feel free to ask questions. Here's Netflix. Here's another one that we're kind of waiting on, as an investment. Here's the 200. And it keeps, I try not to get out on investments unless it really pops down, because you can see you can go sideways for a while, and we're still right here. Now we're going to open up a little bit above. So if we can get up and get a close, and we're still in this, as an investment, we're seeing this rollback. I wouldn't be in it if it was down here following this Bollinger Band down, but we're not. It's using it as resistance. If it can pop up like it looks like it's going to open and then retest that 200 and keep going, then we might have saved, our investment trade. And then you start looking at it's above the 9, it's getting to the 20. I want to see this crossover. Then it can turn into a swing trade if you want, back into swing trade or back into an investment, either one. We're not there yet, though, my opinion. And BRKB, Berkshire just to put it up because they reported, they've had this downtrend. They're underneath and down. Well, we're going to open up here. Okay, we're not at the 9 yet. We don't have confirmation, but this could potentially be a nice swing trade, and we're under the 200. So again, we did this as an investment, and we showed where we got out, and now we did it as a swing trade too. So now we're out of Berkshire in both the swing trade and the investment. If you use the 200, and we're going to wait and see if we get back in. Okay, we're not there yet at this level, and the oscillators certainly don't tell us to be in there yet. But this could be one if you wanted to get into Berkshire. Here's the 200. If we can get back in on an investment or even on a trade, we're not there yet, but we're going to watch it. Okay, I'm going to get in real quick because we talked a little bit. I'm going to go in our watch list, and these come from Kerry's tell sheet. So on a watch list swing trade, you've seen AMPX. The problem I have is we're right here. We don't have a crossover or confirmation on this MACD, and I really like that. We do on the stochastic. We're not there yet. And then you got to talk about risk and reward. You're right up on the upper Bollinger. We've come up here before. So, we closed at 1409. We're going to see some resistance at 1556. So there's your potential gain, but your loss is down here to the 9. So again, I don't have confirmation on this. It's really been flat and it's been bouncing off. So, your reward is up, 1556 if it gets past this Bollinger, which we've only been there twice, in a while. So just be careful. Again, on a trade, Kerry is an investor on this, so he's longer term. CRDO. This one's a little bit better, although it's outside of the Bollinger Band. It does not have resistance other than this sell order. I do not like to buy outside of a Bollinger Band. Some people do. You ride this momentum. Normally it doesn't, trade outside of that more than 5 times, but you got good oscillators down here. So if you're you have a little more risk in there, you might want to try to get it. I like to get it inside this band if it comes back in, and pop it here and then ride it up. So on Credo, potential swing, you might see resistance come in, and that would be the end of your party on the swing trade. But again, got some sell orders up here at 201.62 on Credo, but I like the oscillators too. HSAI. And again, these are all related to the AI trade. This one's been kind of sideways and it's bounced off of the 9, hasn't got under it. So it's been using a support, but it can't get past this 20. We're going to need to get past that 20. When we come down here, we're at 45. I like to get momentum at 50, but the oscillators are looking good up here on the stochastic and the MACD. I just need a little more momentum because we're moving sideways. Your Bollinger Bands are coming together too. But we did bounce off support. I like that. Got above the 9. We'll see if we can get a little momentum. And then you got sell orders here at 25.74, followed by a really good level of resistance at the 50. So 2 levels here. So you got a little bit of room up. If you can hold the 9, it's been testing the 9. This is your reward. Here's your risk down, then risk down here on the second level. It's on HSAI. Marvell. Sorry, this is taking a little while, guys. My days are always this way. This is kind of the same with sideways. Got above, we're above the 200, above the 50. Kind of got a nice roll. We're on top of the Bollinger Band. I like to get it inside, and try to ride it. Got the Bollingers are kind of diverging, which we like, but you have sell orders right here. We hit that on Friday and came back down to the Bollinger Band. Doesn't mean we still can't roll up, but just remember there are some levels of sells here. If we get past that, you got resistance up at 113. So this is a little bit better than I saw on the other chart because we see the oscillators are all in unison here. SITM on a swing trade, here we are. Nice support at the 50. Then we had crossover and the 9 came down, starting to roll up. Unfortunately, you got resistance here at 302. And you also have earnings on 11/5, which is 2 days from now. So if you follow my rule of getting out before earnings, you only have 2 days of potential trade before you'd have to get out. So, factor that in. I probably wouldn't do it based on that. But again, we don't have confirmation yet on the MACD, but it looks like it's going to cross, today. And then SYM. SYM, again, another one above the 250. Has a nice run up right on the Bollinger. If I was trying to get in, I would hop in, try to get down here. You can see it wicks down, comes back up. I kind of go back and look at where it's at. Maybe at this level, you put in a buy if you're going to get in, try to ride it up. You got resistance up here, 87.81, where you'll find some sell orders. On the end of the 200, there's only 2. Confluent on his list. Now this one's having trouble getting past the 200. You see it, boom, boom, boom. This has to get past the 200 before I would even consider it. But the problem is I'm seeing these oscillators go down. We're flat here. And then you've got resistance right above it. So, what's your reward? What's your risk? The Bollingers are flattening out a little bit. Doesn't mean it can't get past there, but then you're going to have some resistance up here at 24.95. You're at 23.37 and having issues getting past that 200. And then the other one, which I like better. This one kind of has that swoop down. We've come down, we hit support. I like that. It gets above not only the 9, but the 50 and maintains it. You've really got a tight band between Bollinger and the 9, which is support. And you got flattened out stochastic. You got a nice moving up momentum on the RSI that's separating MACD. So, here's your sell orders. Sell orders at 210.10, closed at 205, so $5 up. If you get past that, your 50's up here, or 200's up here. So we can see if we can get a little bit of a bounce on that, but that's potential for under the 200. But just be aware of what the risks are on those. And that's I got a bunch more, not in detail, but we can talk about. If you have anything, put it in the chat. I took way too much time from Trent. Sorry about that, Trent. It's Monday morning.
That's all right.
Yeah, and we'll get to your questions also in the chat. So sorry, Trent.
No worries. So share this. So just give you an idea what the options market is, where it's pricing in. The indexes, SPY, well, that's the ETF for the S&P 500. It's got a major resistance level at 700. That would be 7,000 on the S&P, and that's honestly where I think we will get there at some point this year. But we have resistance secondary level at 690, and then big support level at 660, and a secondary level of support at 670. We're sitting on this gamma flip line, let's refer to it as the bull bear fight line. And right now we look to open at 685 roughly on the S&P SPY. So we're in this sort of neutral zone. We had some news just came out on Amazon. They signed a OpenAI deal for 38 million to use AWS. So the stock is popping. I'll hit that here in a second. When I look at the Qs, we looked open at 634 versus the 629.07 close on Friday. Also, we came down to this sizable support level here that option market is putting in at 625, resistance level at 640, and then a secondary level at 650. So we looked at the biggest challenge right now will be to get through that 640 level. But we're right again, just like the S&P, we're sitting on that bull bear fight line. And so right now, Friday, it closed below the fight line. So that means there's more potential volatility, but right underneath it, you got that 5 points, below it, you got some big support level. So it's coming down. It looked like it extended down your day, got as low as 626.69. So right just above it, and then closed up a little bit. But today we look like it's going to close just right at the top of where it got as high as 634.20 right now. So question is, where does it close today? And chances are there will be resistance at 640. This excitement over Amazon and OpenAI's deal will fade throughout the morning. Remember, market makers know this was going to happen, or not market makers, but institutional investors knew this was going to happen. So they loaded up in some way, probably on Thursday, Friday, and they will take profits at some point this morning and then let it settle. So look at the Q.
Just like Amazon did the other day.
Yeah,
Yeah.
I'll tell you what I did Friday. I bought puts at 8:45 Central Time. I should have cashed out earlier, but I ended up walking away with about 26% return on it. Not a big amount of money did I risk, but it was just obvious this is how it was going to play out. And I think once again, it's the same thing today. So be careful buying in at these big gap ups like you're seeing. IWM is the Russell 2000. We closed right there at that bull bear line, sitting on it. Today, it looks like it's going to open a little bit down at 246.15 versus the 246.23 that closed at. You got resistance level at 250 and support at 240. So when I look at this, I'm like, well, there's more downside opportunity than there is upside. So just be careful of the small and mid caps. These are higher risk credit wise companies because they're small, because they oftentimes have to borrow enormous amounts of money to get to become mega cap companies. And so their stability is fragile. So just be careful in that sector. Let's hit upon momentum or percentage of stocks above the 20, the 50, and the 200. Like Mark was emphasizing, there are more decliners than decline achievers. I guess what was the word? Decline in
Advancers.
loss of, what is it? Advancers. Thank you.
Yeah.
So you're seeing the majority of the indexes move higher because of a very small group of companies. The 20, you got 39.48% of stocks are above the 20-day. We have seen a continuous decline since Monday, the 27th of October. On the 50, similar kind of look on the chart here, about 41.44% are above the 50. And then sort of the basement of the house is the foundation. You could look at it as stocks above the 200. You're right at 54.76. And back on Monday, the 27th of October, you were at 59.78% of stocks were above the 200. So we're seeing that decline. And I think that's something you just pay attention to. We saw this back here in or mid-February into the 1st of March. And this is, you got to look at the whole picture, and instead of just a narrow slice of it, it'll give you an idea of direction of where the market's going overall. When I look at the VIX is up today, not a whole bunch. Actually, it presently sits at 1743. Yes, Friday it closed at 1743, but it's been as high as 18.10 pre-market. So I'm seeing this cup forming. We got resistance, of course, at 19. And once we jump into the 19, we get in the chop bucket. That's where volatility expands. Stocks move around a lot. They can be positive, it can be negative as well. So just keep that in mind. Um, but I anticipate volatility is going to continue to move higher. And I hit upon it Friday at the end of Kerry's call, and that is because where is it? Let's see here. Because of that spike. And this is the total securities purchased by the Federal Reserve in temporary overnight market operations. And what this is, and I did a couple of videos on it this weekend. I did a deep dive on this weekend as also, and that is what drove this big jump, this $50 billion where 40 different institutions, banks come to the Fed window overnight and say, I'm going to pledge my treasuries and I'm going to pledge my CMOs, my collateralized mortgage obligations in exchange for cash. Why is this happening? And we've seen this back here. I won't get too in deep into this because you can see the video I posted on Saturday where we did discuss this pretty in depth. This happened back in 2020, June of 2020, and really started. And you can see this here. This is 08 kind of thing. What this is, and I got to digging into this weekend, is the Federal Reserve. We have a government shutdown, and that government shutdown means that employees of the government don't get paid. I think it's 670,000 people. Contract workers don't get paid. That's another 700 and some odd thousand companies, I guess, people or companies, probably people. Your SNAP program, there's about 40 to 41 million of those people. So overall, about 448 million people are not getting some sort of government check in some way or another since October 1st. We're now in the 35th day of this. And what this means is the Treasury receives tax money. They receive that money from taxes, your income tax, if it's sales tax, that kind of thing. It comes in, and typically they have what is called a Treasury General account. It's their checking account. And they typically hold about 600 to 800 billion on average balance on that. Well, today it's over $1 trillion. Why is that a good thing? I mean, we all want our checking accounts to have more money in it, right? Well, what it's representing is that money's coming in, yet they're not writing checks to pay people. Roughly, just say 48 million people aren't getting paid today. And so that money, typically when they write that check, that money goes out to the banking system, my regional bank here, or my, big bank like Bank of America, or any of those banks. So that money's not flowing into those accounts. And they use that money, the banks use that money to fund overnight operations to cover, and they exchange that money, your money and my money, throughout the banking system. But when it doesn't show up, they still have those obligations. So they then go to the Federal Reserve and the overnight repurchase agreement window, repo window. And we're now starting to see the strain of this shutdown on the system. And if it were to continue, right now it's representing about 1%, I believe, if I'm saying this right, 1% impact on GDP. So we should expect the fourth quarter GDP numbers not to be all that great. But if this extends into December 1st, it represents roughly 21 billion in economic loss that would have been typically moving around in the system. The other big part of this, in my opinion, is that those are, say 48 million people don't get paid. It's then the second tier people. So if you ever have gone to a Shop a Snack or a 7-Eleven at 7 in the morning, oftentimes you see construction workers there. Well, government hires people, construction companies, to build things for our federal, for the United States. Well, if those guys aren't showing up because they're not getting paid, because their companies aren't getting paid, well, that means the Shop a Snack or a 7-Eleven owner isn't getting paid. So it's a trickle down effect. That means rent is not getting paid. That means credit cards aren't getting paid. That means car loans are not getting paid, and so on and so forth. So you can see this whole avalanche snowball effect. You crack, you know, it's not the AI bubble, it's the credit bubble. And this is, I think, one of those things, if they don't come to some conclusion and some agreement on this, this could snowball. Now, the flip side of this, and the opportunity in this, in my opinion, is when they do come to an agreement over the next week or two after that happens, all that money is going to come back into the system, and it's going to psychologically pump the system. It's going to pump the market. And that's where you potentially could get a bump in the stock market, in a big move, a spike in the indexes. And that's where you get the 7,000 on the S&P. But the problem is they got to agree on something. This is a trickle down effect. And that is my concern. It's the unknown market event that is now known. And most people don't realize that if the Treasury can't write those checks and isn't authorized to write those checks to pay people, that will eventually trickle down. And I think that, to me, is like, okay, how do I risk manage around that? Now, let's put up Amazon real quick here.
Hey, Clement had a question about your other chart before you get too far. He said,
Oh,
what
okay.
about before on your chart? And his microphone doesn't work, so I'm trying to work with him here. He says microphone doesn't work. And he says, does it move that way before COVID? And I was talking about that other chart you had. He said,
Yeah.
yes. Does it move that way before COVID?
Bear with me.
There it is right there, 2020.
So this happened as well in September of 2019. If you all can remember back that far, we had a repo market event. This was the week of September 16th, 2019. You can see where it spiked. Repo rates got like over 10%, which is astronomical. But it happened that week as well. Then again, similar kind of event the week of the 23rd of September. And then it continued on. So this is like a warning sign, in my opinion, to March of 2020. We started to see this liquidity squeeze. Think of it as oil in your engine, and when the oil is normal, like we've seen back here since was June of 2020, it's been at zero. We haven't had a demand for it. And then all of a sudden the oil gets sort of tight and you see this spike. Well, that oil is drying up, and that's what this represents. The oil started drying up. It's a sign. COVID markets didn't tank until March of 2020. Yet there were signs in the financial plumbing that we had some backup, we had some issues, and that was shown here in this repo market activity. This is something I just believe you have to incorporate into your risk management process. This is one week.
It's
Yeah.
interesting that, I was thinking over the weekend as you and I kind of text back and forth as we always do, with the shutdowns and people, and 40 some million, whatever you said, is huge. And if people don't have paychecks, where are they going? They're going to their bank and they're withdrawing funds, you know?
Bingo.
Yeah, to live, and banks are like,
Yeah.
okay, banks don't have funds just sitting there to go try to take $10,000 out.
No, you try to do that, you have to call in ahead because they gotta get the funds.
Right.
I mean, I've tried that. I tried moving banks once. I had 20K and I went up to the window saying I need to withdraw my account and close it. And they looked at me and said, "You got to give us 3 days." I'm like, "You're kidding me?" Because we don't have that money here. Oh, this was back oh 05. I did that, not
Yeah.
knowing what was coming, but they don't have the money. And honestly, I told Ginger over the weekend, I was like, "Hey, I've been watching this shit and a whole bit. I think I'm gonna take some couple grand out, just put it in the underwear drawer this week." She looked at me and goes, "Why?" And I'm like, "Well, because it's just real weird in the banking system. That concerns me." And
It's
that's
really
part,
weird to put it in
maybe
the
I'm
underwear drawer.
paranoid. Huh?
It's really weird you'd put it in your underwear drawer, though.
Well, most people won't go there to go digging through if you're getting robbed, right?
Now that made sense to me. Okay.
I think Steve Martin made a joke about that back in the 70s or 80s.
I think you're right.
Yeah. So, but
I,
Nice
anyways,
I,
one.
I think the FBI did that at Mar-a-Lago.
Oh
did
yeah,
they?
they
It
did.
wasn't
They did.
Trump's drawer.
Well, at
But
least that
anyways,
one. Go ahead.
I think my final point of this is these are little things in the whole scheme of it that you pay a little attention to. Like I pointed out, I forget who asked the question, but going back to September of 2019, we didn't see the effects of that until March of 2020. Seems a
Yeah.
little weird, but
Well, look at Michael Burry. How early he was in that he caught the the scam in the housing industry, and it just didn't go for years. I think he got in 2 years early and shorted it, and it just took a
yeah,
while. But I'm like you. I've gone back, and you can go back and see in my office where I put, in the last five uh, big downturns. I just went and said, what are similar, and we're seeing the same kind of things. History does repeat.
yeah.
It might be different this time. I hear a lot of that, but I'm a historian by nature, and if I see things that look, you know, if it looks like a piece of manure and it smells like a piece of manure, it's probably manure. And that's the way I look at it. So that's
Well,
just our opinions.
here's one other thing I want to hit upon. You mentioned Facebook. Friday, I believe it was Friday, Facebook issued $30 billion in bonds. Um, and they mature, they're a laddered level. So I think they go like 2, 3, out to 5 years. There was $125 billion trying to buy 30 billion in Facebook bonds. Now, when I look at that, and then you look at the performance of Meta Thursday and Friday, people don't want to own the equity. They want to own their bonds. And then I come to this question of, well, what happens on Friday? We talked on Kerry's call about how long did it take Amazon's AWS platform to become profitable? And it was over 5 to 10 years until it became profitable. It came out with their earnings. They were pretty great when it came to AWS. And that brings up my thought over the weekend was like, well, if they're going out a maturity out to 5 years and they're raising a bill, 30 billion, they told Trump at his dinner a couple months ago that they're going to spend 600 billion on AI and in the United States. Are they going to be able to pay it at maturity? Is my question. If we have some sort of hiccup in the economic system, and I don't buy stuff through Facebook or I don't spend money on Facebook advertising, how are they going to pay that back? And I think that it goes for all of them. How are they going to, if you think about it, the end user is you and I in businesses. If we're tight on money, I'm not I'm not paying my $20 to ChatGPT. I'm going to cancel it. And so I think that's just something you have to think about, not to be totally Dr. Doom, but I think those are things, but I do think there are great opportunities. You just got to pay attention.
Yeah, yeah. There's just some warning flashes out there, and but we can still trade. We show what you can trade, and you can still invest. We're not out of it. We're not saying get out. We're saying be careful. So
Yeah.
a couple stocks here. Trent, are you done? Are you done?
Yeah, I'm done. I'll
Okay,
get off
all
my
right.
soapbox.
Couple stocks here. I'll get through PERF. I looked at this one. It's all over the place. I'm like, man, look at these big candlesticks. And why is that? Because we're only trading 150, 129,000, 297, 88,000. So your bid, your ask are so far apart. This is something I wouldn't trade in just because the volume is way too low for me. 100,000, 190,000, just not enough there. And that's why you see these big candlesticks on that one. So that one would not interest me. And PPSI is another one. They may go up, they may go down. You know, I look down here, we got 33,000, 122, 93, 74, 97. Just not enough volume for me to be interested. Candles are at least not like the other ones. But again, if you were even going to do it, you know, at these low rates of volume, 33,000, you're still up against resistance here, and you got sell orders, but and your oscillators aren't there. But you know, the volume would knock this off of me wanting to trade them right away because it does not meet a major thing in my critical parameter of my trading, which is you got to have some volume to trade because what we're trading on is volatility in the systematic trading and knowing that your bid's going to be $10.01 and your ask going to be $10.02 instead of $10.01 and $20.02. So that's why we do that. The last one he had, NVTS, Navidius semiconductor. Again, nice little pop up, but here we are right along resistance. Oscillators are down, down, down. This is for a trade. Okay, if you're in it for an investment and you use the 200 or the 50, you're still in. But as the trade goes, we've been hitting resistance. Nines come up. Now we're below the 9. We'll see if it can pop up a little bit, but you got sell orders above that. Something has to be the catalyst, like we saw today with Amazon, or we saw with Iran or CIFR. They're signing contracts with different companies that are making it pop, and that's what gets you past resistance to some catalysts. And most catalysts are what we call unknown market conditions, which is something you don't know is happening, and it happens. You know, an analyst comes out and upgrades or downgrades your stock over the weekend, and it either goes up or it goes down, but you had no clue on it. And a known market condition is we know earnings are going to be on Wednesday, or we know they're going to give a dividend, a week from Thursday, things like that. We know that the Fed's going to have an FOMC meeting this week, and there's going to be an announcement. We just know what the announcement is, but we know what it is. So anyway, let me see if there's anything else.
Can I ask a very quick question?
Sure.
Yeah.
The philosophies that you were just talking about, the way you did your trade and what you just said, the last 3 to 5 sentences there, is that in your swing trading guidelines, maybe?
I think.
Or is your guideline more of a technical guideline?
No, it's a guideline of technicals of the analysis of these oscillators and things.
Okay.
I think I'll go take a look, and maybe I'll have to incorporate that if it's not in there. But I think I do have in there, I like to get out before earnings, for sure, and distributions, because that affects your stock price. So,
okay,
yeah.
Just asking.
Yeah, no, that's a good question. Good question. The NVTS earnings call is 11/3, so be careful. Thanks for that, RJ. Yeah, always check for earnings. Scott wants to look at MSPR, so let's get into that real quick. Thank you guys for all these questions, and whether it's verbal or on the chat, we're trying to keep up with everything. MSPR. Wow, this one's kind of been flat. Okay, where are we? Oh, look, this is really, it's a penny stock. It's issued to meet NASDAQ, so it looks like they're going to be delisted on the NASDAQ. Volume really went up. We went from 22 cents to 66 cents. Yeah, I don't know anything about this. It's a penny stock, and it's just something that if you were a day trader, you'd probably do, because it's so small amount, and it's got, some volume that you could put in some money and pop it.
Yeah, see.
Scott, if you want to pop on and tell me what you think of this, you're welcome to, but I don't know anything about it. It's not something that I would want people to try to swing trade in right now. I don't know if Scott's still out there or not, but
Yeah,
okay.
that was an accident, Mark. I was
Oh.
looking on another screen. And I was
Oh,
wondering if it
well,
was-
it did. I was kind of surprised because it doesn't look like one of your stocks to me. I'm
No,
like, wow,
it's
that's
not.
different. Yeah.
Sorry about that.
No, you're more Tesla and other things. I'm like, wow, that's different for you.
Yeah.
That's
No,
how long
sorry.
Scott's been with. That's how long Scott's been with us. We kind of get to know of what we both like on stocks, and
My bad.
no problem, Scott. Is there something else you want to look at?
No, not at all.
Okay.
Thank
Okay.
you.
Yep.
I enjoy following along and learning still.
Yeah, and you guys can go over to the Platinum Channel chat and meet with Scott and Paul and Dr. Jackson are in there all the time, going over different things that they're doing. So it's always interesting to pop in there.
Take a,
And just
take a look at CIFR is brought up there.
which one is it?
Oh, and Cipher Mining, CIFR.
Okay,
Yeah.
there you go. So it looks like we popped up a little bit there, didn't we? Let me pull this down a little bit. Yeah, it looked like something happened. Someone said they had signed an agreement or did something, and that got us
Microsoft,
above
yeah.
it. Yeah, so that was the catalyst that got us past this resistance. So they signed an agreement. Is it up again today, this morning, pre-market? Probably.
But market's open. That's it.
Oh, it's open. Oh, that's it. Okay, so that's what happened. Okay,
Yeah.
market is open.
Yeah.
Okay.
I think Iran's up 20%. Somebody posted in there as well.
So now the question is for you guys: is this something you chase? And I don't personally, because I try to stick to guidelines if it's outside the Bollinger Band. Doesn't mean it can't keep rolling, but I have to trade by something, and I'm not going to trade by the seat of my pants or my gut feel or my
Might not change it, but
emotions.
might change my risk
Yeah.
and bump
Yeah.
it up.
Well, but I just go back, and if it comes back in, and starts meeting some of my requirements, like here it's crossed over, looks like it's gonna, let's see, no, it hasn't even crossed over the MACD yet. So there's one of my guidelines, for me. And again, it's outside the Bollinger Band. So there's number 2 that I don't like. So 1, 2, but if it comes back in, why not? I want to see this go away, and I don't want to see it look like we saw last week with Amazon, where everyone chased it and then got rug pulled back down a little bit. So anyway, you look back here, we're tapping some highs here, but it started up here, right here. It wicked up, people chased it. This is today, and now it's back at the below, a little bit below where we have a little gap right down the Bollinger. So it's not something I chase. I don't chase them. I'm not a momentum trader. Some of you guys are, which is fine. But it's all about risk. It's whatever your risk is. It's your money. It's your money, and you worked hard for it, and you invested hard for it, and you have a goal for it, whether it's retirement or buying a house or helping your kids through college, or just saving it, or going on a vacation. And so this is kind of how we build that up. And so you say to yourself, okay, if this doesn't hit because it violates some of my rules, I'm talking about me personally, how would I feel about having to wait an extra year to do whatever I was going to do with that money? And it's just not there. And now we're starting to get this little doji of candle of indecision. We'll see. And it's early. And it's Monday. Monday, they have all kinds of orders are piled up over the weekend, market orders, and they have to go through them in the first hour, 45 minutes to an hour. And it all settle out in a little while. I'm sorry, wasn't even showing this. So there it is here. Sorry. And let me get rid of that. Right here, you can see where we are. It's a doji, okay, or above the Bollinger Band, gapped up. This is an unknown market condition that happened, and here we go. So it moved it past resistance. We were fighting resistance until something happened as a catalyst, and that was the catalyst. Can it still go up? Absolutely. Can it come down? Absolutely. Do I know which way it's going to go? I don't. It's and neither does it. It's sitting right here in a doji. All I know is it's up right now. So you got to decide it on your own. It's outside of my trading guidelines. Oh, Randall has a question.
But yeah, Mark, could you give your opinion on the STRD? It's one of the strategies.
Oh, STRD. I'd have to. I know that he's got 4 of them. Uh,
Yes.
the one and what he's talking about. This is a MicroStrategy credit ETF kind of product. Okay, and what Sailor has done, I believe, perpetual. I'm gonna look into this and get back to you tomorrow. But I do know about STRC, which I like. It's a shorter term one that is more like a. If they stripped out the volatility, it's more like a money market or treasury. And STRD. Oh,
It's
sorry, we
a
got that.
guaranteed 10% yield, but you're,
Yeah,
based with the Bitcoin.
well, yeah, it goes on, and he backs it with Bitcoin, but this one has a lot of NAV move on it. This is if you got in up here, okay, let's say you got in here and you got 10%, okay, you got in at $93, and now you're at 76. So if you got 100 shares, you went from $9,300 to $7,600 on your NAV, and your distribution here was $300, okay, on that 100 shares. So you're down still, uh, whatever that was, $600. So you got to watch that on these because you can erode your principal depending on where you get in. Now it's had a nice run here, but now it's dropped down again. The other one that I like, and I will go into these more tomorrow. STRC is supposed to be more straightforward, and what it tries to do here, this is called stretch. STRC, it tries to maintain a par of $100. And if it's under $100, this will pay, I think it's 8 or 9%. If it's under that, it'll pay more. If it gets above it, it'll pay less to try to keep that par right around $100. So this is another one of his longer term credit backed by Bitcoin. So they go out, you buy into this, he pays you 8 to 10% on all these. And his Bitcoin theory is it goes up, and it has by 50% a year. So he's giving you 10% of that yield basically back in a credit situation. Now some of them are, this is a perpetual. Some of them are. I think STRD is one of those. I'll get back to you, but I think it's one of those that's preferred. And if the share price of MicroStrategy gets up to, I think it's $1,000, you get to trade in. You get 10 shares for each share you have of Stride. I'm not sure of that, but let me look into that. We'll talk about it tomorrow if that's okay.
Yeah, my sister's just got a big inheritance, and she's looking to put something that would give her a return.
Yeah.
For about 250 for now to start, but I thought this might be a good vehicle for her.
Yeah, anything that's got risk, and so make sure you look into it. I'll go over them a little bit tomorrow, but this one here is supposed to be more, steady. And this is where they offered it. They offered it at a discount, which is below par, which is $100, and it came up, and then we had, this was August, and so now it's starting to steady out a little bit. But this one, we'll go over this one. This is the one I've been looking into, just because it's shorter term without volatility. But I'll do it tomorrow for you. I'll do it tomorrow for you, Randall, real quick.
Thank you.
Sorry about that. I just looked into them the other day because I do own MicroStrategy.
There was one question about Kerry's tell sheet not having the 3-year projections on it anymore. I'll talk to Kerry about that later today. See what's up about that. I think the other question that was put to me was if you're following the tell sheet 12, which is managed differently than say Kerry's more 3-year projection timeframe, how do you balance that? I think it's the tell sheet 12 is more technically and quantitatively and qualitatively approached. Today, Friday I removed Affirm AFRM from it because of the qualitative elements of it, the risk. Why are they borrowing $750 million off balance sheet from New York Life. Why is that happening? What's in, digging deeper into the, understanding the company, they're on a buy now, pay later kind of platform. That's what they do. And I look at what's happening in the markets and economy, and I go, these guys could be at risk in a big way. So that's why I removed it. Now I did put ASML on there, and I'm trying to stick to Kerry's tell sheet. And one of the biggest factors that I factored into that was debt to equity. How much debt are these guys carrying for expansion? And that is sort of my number one line in the sand fundamentally, is how much risk are these guys taking, and could they default on that risk? But when it comes to combining Kerry's approach and then my approach with the tell sheet 12, I think it can be done very, I think you can put together a process. And my whole thing is the line in the sand, the intermediate trend line, which is 62-day moving average. It's a quarter of the trading days of the year. And that's my line in the sand. Now, if you like a company and you believe in it long term, my opinion is if it fundamentally makes sense, then you should have at least a 1% exposure of your capital that you're investing in this kind of stuff. And if it's showing, like we have been fully allocated in the tell sheet 12 to 8% in each position, it's paid off greatly since its inception in June 16th. But when I start to see stocks like Affirm, Meta is another one that I'm concerned about, because it's below the intermediate and it's below the 200. And I'm going,
Absolutely.
what's going on there? I mean, that to me is a concern. And this is part of that big movement in AI, but I still look at it and I go, why is the market, why is the smart money not jumping all over this right
Look
now?
at Berkshire. Look at Berkshire, 384 billion sitting there, and they're under the 200 too. So he doesn't care about his share price. He's waiting for something.
Yeah. And I get it that these CEOs are like, this is where it's going. And we're looking out 5, 10, 15 years down the road. I get that. But the market is another thing, and your financial goals are another thing. And a lot of times they just don't line up with Mark Zuckerberg's approach to things. And I think that's where
Exactly.
I have to question it in my model and say, okay, does this make sense that a firm and what they do makes sense anymore for the model? Meta is another one. Does it make sense anymore? I don't know. And so those are the things, like, so you can have Kerry's tell sheet. It's great fundamental analysis. Like you said, Mark, it's more information on there than a college curriculum in economics. It's
Yeah.
it's in depth. He goes into it. And I really believe his thesis of where AI is going is spot on. But from that the tell sheet 12 model, it's more of a technically quantitative and qualitatively based. And that's why I make decisions. That's how I approach it. And I think you can combine the two. It's that's part of building your process. One other thing I wanted to hit upon, I know we're running really late. Um, all these layoffs, 48 million from UPS, I think it was. 30
thousand.
thousand, excuse me, that would be weird.
You about fell over when you said that.
Yeah, 1,000. GM 1,800, Target 1,700. Is this all of a sudden? Are they seeing something in the crystal ball, and they're taking this massive action all together? Is this these people are being replaced by AI, or is this a sort of a last ditch effort to pump their stock price? And at the sacrifice of the long term of the company or the individual who got laid off. I was thinking about that over the weekend. I'm like, is this 40 8,000 people all of a sudden at a
Right before
UPS.
Christmas on a delivery company.
Right.
Yeah.
What? Is this a effort to keep their stock price higher and to appease their stockholders? Or is it really a strategic shift in how business will be done through artificial intelligence, autonomous vehicles? Is that really what's happening? I struggle with it. Um, and I was thinking
Well,
about it over the weekend. I was like, that's a lot of people to just go slashing through unless you know something. I don't
well,
know. It's
it all comes back to the consumer. The UPS is a consumer driven company. They deliver boxes to companies and us, you know.
yeah,
And if they're laying off 48,000, that tells you right before Christmas. And then so I'll be looking like tomorrow at Shopify and see what they just say. And then really on Wednesday we got McDonald's. That'll be an interesting one to see what they say, about
that is
consumer
one.
spending. And then on Thursday is Airbnb. I want to see how travel's going and what they're going to say. That's going to give us, we're going to have to piece it together because no one's going to tell us. But, I'm seeing, like you see, Trent, and I've always said the layoffs are going to be the one that'll trip us up. If people don't have money, they're not spending. And 65-70% of our economy is people spending, So
Yeah.
that's very worrying to me also.
This is a conversation I had at 4 o'clock this morning with my wife. She and a business, another artist have a gallery. They opened it up, and they're having a meeting. They're bringing me in on it, and it's a question of why are people not buying big art? And big art is typically more of the wealthier people, upper level of the economic system. They're not buying art. One of the biggest art shows in the world, down in Miami, it's in Paris and as well. Um, 8 of their largest exhibitors, which are galleries, and these are galleries that are selling paintings for like $5 to $50 million, pulled out of this event, coming in. I think it's the end of this month. And these are people. These are like this is like Apple not showing up to a technology event because they know something. And so we're starting to see that, both from the small retailer to the big art spender, is people are pulling back. And so, um, like you said, you got to watch the job numbers, which you won't get if the government doesn't open up. So that that's the other sort of like mystery gift, that once it opens up, all this data is going to come out. Who
Yeah.
knows what we're putting our hand in the bag to pull out? It could be good, it could be bad.
We
So
still
we'll
get
see.
ADP, which is a good one. So we still
Yeah.
get that. So
Was it ISM
that's,
and
yeah, manufacturing
PPI
services. Yeah.
that, unless they open up, that I believe that doesn't come out. So
Well, we're supposed to
that'll
have
be telling.
unemployment rate and the non-farm payroll this week too. I'm not sure that's
Yeah.
coming out.
Yeah. Crazy. All right, we'll wrap it up there. Thank you all for hanging on, and thank you
Yes,
for all
Venus.
the
Real quick,
questions and comments.
I was looking up
Yeah.
stuff because I work overnight and unfortunately I'm on X a bit too much. But there was something in regard to the layoffs. There was one posting that actually went through and broke down uh, the layoffs by company,
Really?
and most of it, or a good bit of it, if you would, were not the frontline workers. It was mid-management. One company laid off a lot of people in HR. And when you started reading through it, the author's conclusion was, and by reading it, at least on face value, it seemed to be a good bit of AI replacing these
Mhm.
particular jobs.
Okay.
I think I agree with you to a degree, Steve, but I think they're using AI. I think these companies, because I used to work for Fortune 500 companies, they are using AI as an excuse to
Oh,
level off their management. They're just using it as an excuse.
Absolutely. Well, it wasn't, it was conjecture that based on, in other words, one company was laid off a huge number, meaning the majority of people that were laid off from one particular company was strictly from HR. So what the idea is, hey, they put all the HR stuff on the web, all of it's automated. The employee has to go through there and go through everything. So heads are not necessarily required. But yeah,
Well,
the
HR
crux of what you're saying, I agree with you there, Mark.
Yep.
HR has been always the target. That is the smallest division in any company. They have reduced that down to nothing. And if they can do it with AI, I mean, they're gonna do it.
Well,
Yeah.
here's the other thing. If you're laying off and not hiring, you don't need much HR. Even that,
That's true.
even without
True.
AI.
You can farm that out, right?
Yeah,
Um,
definitely.
Well, yeah, a
Okay.
lot of companies have farmed it out to third parties, especially the smaller businesses.
Yep.
Yeah. Crazy.
Well, thanks for
All
that.
right, we'll wrap it up
All right.
there. Y'all have a great morning and afternoon. We will be back here tomorrow.
Make your
Same
first
time,
million
same
before
place.
11 o'clock.
Yeah.
What's that?
Definitely.
Make your first million before 11 o'clock.
Right. All right. Y'all take care. Have a great day.
All right, guys. See ya. Thank you, everybody.
Thank you. Bye.
Peace.
Bye.